The future of finance, money, assets, all of it is on blockchain, is digital. It is a digital future. There is zero question about that. The ship
Right.
has sailed, and most assets actually participate in that digital ecosystem right now. But real estate's been left behind until now.
If you're within 3 feet of me, we're probably talking about real estate, much to my family's chagrin. But here's the thing. Most people see 7% rates and freeze. I see opportunity. They're waiting for the perfect deal, and well, I've analyzed thousands of them, and perfect just doesn't exist. So I talk to operators across every asset class, flippers, multifamily syndicators, note investors, and whatever else is working. No sales pitches allowed, just real lessons from people actually doing it. I'm Ed Matthews, and this is Real Estate Underground. Greetings and salutations, Real Estate Undergrounders. It is Ed Matthews with the Real Estate Underground. Thank you so much for joining us today. Keep those comments coming, as well as obviously a lot of you can text the show directly, text me directly through the show notes. And I'd love to hear from you. I'd love to hear what is resonating. And as important, I also want to know about what you want to hear about, right? Because this real estate world is a big world. And we're excited to bring in new and unique guests who come at this space from a lot of different places. And with technology, where it's going, with tokenization and crypto, which we're going to talk about today, not the crypto part, but as well as artificial intelligence and all of the things that are happening in this world. There's a lot to talk about. So keep those comments coming. I'm grateful for all the information you guys send me. And thank you again for following. So with me today is Tyler Vinson of RE Tokens. See, I didn't lie. I promised tokenization, and here I am delivering. Tyler, welcome to the show. It's good to see you, my friend.
Oh, I appreciate you inviting me. Excited to be here.
So I got to be honest with you, man. When I hear tokenization, I immediately go to NFTs and crypto. And I am one of those human beings that just doesn't get it. Not negative or positive. I honestly haven't spent enough time to understand the opportunity. And I've had multiple people in my life, most of them are a lot smarter than I am, explain to me that, no, this is something you need to pay attention to. And when we discovered, I had an opportunity to read your book, and which we can talk about a little later. But that was more about the cash flow and multifamily. But the opportunity to meet you and actually ask a whole bunch of questions to a person who's actually a world expert on this is a great opportunity for me and the audience. So welcome.
Yeah, no, I appreciate that. I think educating people is a big part of it because it gets really easy to overcomplicate or misconstrue and get lost in the technology side when there's really no need to do that. Yeah, happy to get into that.
Yep. And I'm one of those guys, right? I
Okay.
immediately make it way more complex than it is. And I know that. Knowing you have a problem is half the battle. So here we go. So in terms of who you are and what you do, why don't you break it down for us? Let's start with your background, and then we can get into the business.
Yeah, my background is going into year 25 now of investment real estate. That's who I am and what I've done. And I still do acquisitions and dispositions every single year, raise private capital and do all of the traditional real estate things. That's what led me into this. Really have done it all from, I started out in duplexes, I started buying some duplexes. And then, I don't know, flip maybe 30 or 40 homes, 50 or 60. I don't know. It was a long time ago. I don't flip homes anymore, but really got into the longer term rental game and fell in love with multifamily just due to the ability to standardize and scale. And that means you're scaling profits. Later did a lot more commercial. I've done office buildings and retail, and my Class A storage facility is probably my favorite investment right now that I currently own. And so there's just a spectrum of things, but I specialize in creative finance and deal structure, lots of seller financing things and teaching sellers the tax advantages of that and just creative real estate deals with investors. And that's what actually brought me to fall in love with tokenization, is just that entire ecosystem of investment real estate and the shortcomings that are involved with it.
Yeah, liquidity is always a big challenge, right? I think that's part of what we're talking about here. So let's talk about that. When I think about tokenization, I also think in parallel to syndication, right? And I'm a limited partner on a whole bunch of different deals here on the East Coast and down south. And so I get that part of it. I've been a general partner, and I've also, like I said, I'm also an LP on a whole bunch of deals. But the question I have is, how does syndication differ from tokenization? I know there's a difference, and so I'm going to ask you some really dumb open-ended questions, and so until I can get my caveman brain around it.
Yeah, no problem. I think we can get that accomplished today, Ed, and
Cool.
and break it down. So you will be the hero of the cocktail party stories after this with
No, I'm just going to
tokenization.
call my friend Tyler and have you explain it, but that's cool.
Yeah, there you go. Let's actually, tokenization is simply an enhancement to syndication, not a replacement or a disruption of it, but a massive enhancement to it. So let's just take a quick step back and talk about what the heck is tokenization? What are these guys talking about? What does it mean to tokenize real estate? What it is, you just talked about GPs who sponsor deals and then LPs who invest in the deals and those syndications. When you do that as an operator, a syndicator, what you're doing is you're selling LLC membership units, or you can call them shares, to investors, and that's what they own, at least on paper, right? Tokenization is simply making those ownership units, those LLC membership units or those shares, digital, giving them a digital ownership component. And when you give them that digital ownership component, that's what tokenization is. And when they have that digital ownership component, we can record it on the blockchain. And the blockchain opens the door to all sorts of different capital markets and ecosystems. The future of finance, money, assets, all of it is on blockchain, is digital. It is a digital future. There is zero question about that. The ship has sailed, and most assets actually participate in that digital ecosystem right now. But real estate's been left behind until now. Real estate's been illiquid. There isn't that ownership. You can't trade those shares that we've talked about. And that's what we're changing here. So to give folks a visual, the way I like to visualize it for real estate is, let's say that you've got an apartment building and it's like a big gold brick, right? Yep. A great asset, very valuable, tangible, real world, big gold brick. But it's really hard to get in and out of ownership of a really large gold brick. Yep. And if a few people go in together into this gold brick, they have to do everything together at the same time. So if you're going to sell the gold brick, everybody sells the gold brick. If you're going to get a loan against the gold brick, everybody gets a loan against the gold brick. Now imagine taking that gold brick and turning it into 10 million gold coins that both the GP or the syndicator, as well as the LP investors, all get to hold their own gold coins, their own piece of that gold. And now they can choose, how long they stay in the deal or don't stay in the deal. In the near future, they'll actually be able to get loans against those tokens as instead of jeopardizing the title. So there's all sorts of cool things that have happened in what we call the Web3 world, the blockchain world, the new digital economy that will allow you to use your private shares of real estate, your real estate investment in this world. And so that's really where what tokenization is and the effects of it. And we can certainly get into the benefits of, okay, so now you have these tokens, this digital ownership, we can get into what it does.
Yeah. So tons of questions now. So that was a really good explanation, and the light bulb went off in my head. When I think about what you just said, right, I hearken back to my days in the tech world where I had a whole bunch of shares. What were they called? Restricted shares. Mm-hmm. And so they were worth something, but opinions varied on what they were actually worth because there's really no market. And I was locked up. I was locked up until 180 days after the company went public before I could cash in my 4 shares of whatever company I was with. And there were people. So I'm in my mid 50s. So I'm going back probably 15 years at this point. This was pre-blockchain. I think it was probably I'm trying to remember the gentleman's name, the Japanese software engineer who created the
Oh,
blockchain.
Satoshi.
Satoshi, thank you. All I could think
Yeah.
of was Sadahara O, and that was he could
Yeah.
hit baseballs, but he couldn't. I don't think he knows anything about the blockchain. But
Yeah. The Bitcoin white paper. Yeah.
yeah. And or Jack Dorsey, or the founder of Twitter, who's allegedly Satoshi, but who knows? He's smart enough to be. But I'm curious about, when I hear what you were just explaining, I think of the lockup, right? And
Mhm.
so in terms of that lockup, real estate is very similar, right? We've got part of the whole conversation that like I have with potential limited partners when we've got a syndication is, hey, look, if you need your money back, here's the process we would have to go through to make that happen. It's hard. And a lot of times we have to say no or not yet. Right. And if you foresee that you're going to need this money in the next year, 18 months or whatever, this is probably not a good fit for you. Right. This is a 3 to 5 to plus year investment that is fairly illiquid. Right. And what I'm hearing is that tokenization kind of unlocks that potential equity. Two questions off the top. One is, am I explaining that correctly? That it provides liquidity, basically provides a market for your membership units or your shares. Yeah.
No, not tokenization in general. We'll unpack what you said because it has a lot to do with securities law, actually.
Yeah. Okay. And then the second question is, part of the process, and I know you know this because you've sat in this seat as well, of being a syndicator, a general partner, is you're dating a whole lot of people, but you only get married to a few. And what I mean by that is there are a whole bunch of people out there that are interested in investing in real estate, but there's only the projects I run. I think the projects that you run are 506Ds. So those require accredited investors. And that means that the person or the couple earn 200K as an individual, 300K for the last, 3 years. And the expectation that's going to continue. And they've got $1 million plus net worth and a whole other bunch of ways you can qualify. But those are kind of the generals. And so that's not a lot of the population, right? And you are culling down your potential. And then within that is do the limited partners have a vision that is congruent with yours? And that's the dating part is, okay, Tyler likes me and he's the general partner. But if I'm a pain in the neck, Tyler's probably going to date me and then not marry me. And there's some of that out there. And how does tokenizing real estate, when a general partner has gone through vetting their investors, how does tokenization affect that relationship?
Yeah. Yeah. A lot to unpack there. So if everybody will bear with me, I'll run you through the ecosystem and we'll answer all of those questions.
Cool.
And feel free to listen to this section twice if you're new to it, because
I didn't say the questions would be easy.
Yeah, no, I love it though. It's important. It's important because it all plays. Like, how does this work? What does it mean? How does it change things? And I think the first thing we need to start with is fundamentally, these are real estate investments. Fine. And actually, let me I'm not going to give any securities advice. I'm not soliciting securities information, tax or legal. We're going to talk about those things right now, but it's just for educational purposes.
Yep.
Okay. Yeah. So when you do a syndication, like you mentioned, you've got restricted shares, and real estate is traditionally very illiquid. And to your point, I'm a syndicator myself. And when I raise capital from investors in the past, it was, hey, if you need this money within the next 5 years, this isn't going to be the fit for you. Because yes, we may have an exit strategy in 5 years or so, but depending on the market and what's going on, when I hear a lot of syndications that run 5 years, 10 years, some a lot longer. And so to your point, they're very illiquid when it comes to that. And that is something that we're changing. So here's the ecosystem and how it runs. So there's securities. So it starts with that and the security documents. We mint the tokens. What we have at RE Tokens is an SEC registered secondary marketplace. It's called an ATS. We are, I think last check, there's only 10 or so companies in the United States that have a digital broker dealer ATS license, like RE Tokens Capital does. And I'm not aware of any others that are exclusive to real estate like we are. So just want to lay that out there. And that doesn't actually have anything to do with tokenization itself.
No,
The
but it's
tokenization,
huge credibility and trust factor, right?
it's everything. Yeah. Yeah.
It's what when
Go
you
ahead.
can say that you're a member of FINRA and that you enjoy the same level of commitments around ethics and the rules you follow and all that, that you're a local financial advisor that you know also follows. That is several levels above a lot of the players in the real estate market and what we're talking about, right?
Yeah, no, it's important. The levels of due diligence and compliance really is a huge part of what we do. So what we had to do to make all that work is you have restricted shares. So there's still particular lockup periods, so on and so forth. But for example, when we talk Reg D 506C, like you said, that is a exemption to registration on a primary raise. It's a safe harbor that allows you to do that.
Right.
On a secondary marketplace or a resale of those, whether it's a GP or an LP able to resell, there's an exemption called Rule 144. So this is how they fit together. We have a entire backend infrastructure that we had to build that is what we call a Web3 infrastructure. That means we've taken a transfer agent, which is required for the ownership change. We've taken custodians, which holds the assets and holds the currency. We've got escrow accounts built in there. And then we have an ATS matching engine and all that. People don't need to know what that is. Just that's the mechanics under the hood of what we do. The interface is simply going to be clicking on a few buttons. So what happens though is restricted shares, for example, we're talking often about there's two restrictions I want to touch on. One of them is under Rule 144, after 12 months, non-accredited investors can buy these, what were originally Reg D 506C shares. And that's a huge game changer, right? Is now when you go trade on the secondary market, non-accredited investors can participate. And when you tokenize it, you're just taking that big gold brick and fractionalizing that ownership like gold coins. So somebody could sell, let's say somebody invested 100,000 originally and they've made, I don't know, 10,000 over that year. They could sell 1,000 in tokens, 10,000 in tokens, 50,000, 100, and then same with the buyer aspect. And us as a broker dealer and as a platform, it's our job to make sure that all of this is happening in a compliant manner. And when that infrastructure is laid out, right, everything is moving online. So people can invest online. They can see your deal online. They sign the paperwork online. These custody accounts are hooked to transfer that online. We even have AI integrated into the platform to help communicate with investors. So when you talk about the dating part, and when I raised private capital, these were very personal relationships. They were sitting down for lunches and so on and so forth. And I think on the primary raises, especially large investors or investors that you like a lot, that part may not change as much, except they're not having to go to their bank and wire funds, or they're not having to get a cashier's check. They just have an account that's hooked to their bank account and that all transacts. But you can choose the level of interaction there. But when you open it up like you do on our platform, and you may have a global audience at this point, even if it's a Reg D 506C, it can be from another country as long as they can go through accreditation and AML and what's called KYC, know your customer, and still invest. So it's really important that you have larger communication and automation systems built in. An example I like to give is just because you invest in Amazon doesn't mean you get to call Jeff Bezos, right?
And he doesn't return my calls or Andy.
And I think when you talk about trading assets like that, it's typically the case. Now, maybe there are some investors that can call Jeff, right? Or so on and so forth. But the key is you want disclosure and communication and all of those things. So with the technology that's there, that can be made available. And because this stuff is put on the blockchain, all the data is extremely transparent as well. And so that is a confidence builder in itself for that. So that's normally what we do is we'll mint the real estate tokens, put them on the blockchain. They go on the platform. It has all of these automations. For the investors, it's very much what we call a Web 2 experience. So it's like your online banking account or investment softwares that you're used to. all of that infrastructure is hooked on the back end. So they're able to actually see their ownership piece. They could move it if they want. And then after 12 months, they can put it on the secondary market, and accredited and family office and funds, everybody has access to that. So at the end of the day, what we're talking about is these private placement shares of real estate being able to trade similar to the way stocks and more recently crypto trades today. And those assets themselves have been turned digital. And because of this infrastructure that I described, they're not directly fungible, meaning directly tradable, but they all participate in the ecosystem. For example, you could use a stable coin or a Bitcoin or regular US dollars to invest in these real estate tokens.
Yep.
Doesn't mean the seller has to take that. There's a conversion, but you see all of this plays. And so real estate now can settle within minutes versus months. And that really takes out a lot of the middle expense involved as well.
Fascinating. And so who sets the market?
As far as the market pricing?
Yeah. Who makes that market? Right. Exactly.
Yeah. Yeah. Okay. So bear with me as I geek out a little bit and we understand these. Yeah. There's a couple kinds of markets. If you get on Coinbase or if you get on most of the public stock markets, there's something in the middle called a market maker. And that's who's really making the market, because you're not actually transacting buyer to seller to buyer. You're transacting with that middle person who makes a spread in the market, and they'll set that. I do think that ultimately there will be a market maker. In fact, we're having those conversations in the real estate token world, but they also make a spread, right? So there's pros and cons.
They're providing a service and adding value to that transaction.
Yeah. Yeah, exactly. So I agree. It's worth it for the liquidity and potential stability and stuff. But in the early days of this is an order book system. And if you're going to sell a real estate token, then you're going to choose the price and list that. And as part of Rule 144 and as part of our compliance as a platform, all of the public front-facing information, the financials, the sponsors, the tax returns, probably all of those types of things are going to be available to potential investors when they invest in that. They're going to be able to see that on the secondary marketplace when they purchase it.
Interesting. Plus and minus of that, right? If you and I are part of a syndicate and Joe Smith is the GP and I run into financial trouble and I need out of this investment, how does that affect? And so obviously I'm a distressed seller as opposed to a selling from strength. How does that affect the overall value here?
Stay with us. We'll be right back.
A motivated seller just filled out your web form. If you call back within 5 minutes, you're nearly 4 times more likely to get that seller appointment. But delay your follow-up by even just 10 minutes? Forget it. You're toast. Ella Vista Connect calls that lead back in 60 seconds, qualifies them, and schedules your meeting. Find out how much slow follow-up is costing you. Free calculator at ellavista.com/underground.
Yeah, I don't think it does. It's just like real estate in terms of sometimes you get a heck of a deal because you got a distressed seller, and sometimes interest rates are really low and there's high demand and you're going to pay full boat market. But it's not like crypto. To your point, this is not crypto. It's not a speculative investment in terms, because if the real estate itself is putting out a 7% cash on cash return, based on the, let's say $100 investment, let's say we'll just call it $100 token, okay, or $1,000 token, it's putting out a 7% cash on cash. The NOI is on there, the cap rate's on there. That's how these things are evaluated. Appraisals and stuff like that. Maybe somebody lists it for 1,100, and now your cash on cash return would be 6.3, and you can choose to buy it at that. Or maybe or I did that backward. Yeah, I'm sorry. And then somebody listed it at 900 instead of 1,000. And now your cash on cash return is 7.75, right? Even a distressed seller. So there's still a real world asset here. It's the real estate with the real actual cash flow, the real K1 tax benefits, the real appreciation. It's that gold coin of the actual real thing, that piece of the real thing. So I have no doubt that the market may fluctuate in pricing, but that's how markets move anyway. The difference between real estate and some of these private company markets is there's not valuations based on users or typically potential. There are fundamentals that are involved in real estate that don't change. So I don't think you'll see the same type of volatility until we get way down the road and there's derivatives and things like that, or probably
That's
right.
that's a different
Different game. Yeah. But that's it. Cause we have to underwrite this. Once the deal is approved, anybody, GP or LP that holds those tokens can list on the marketplace. And same with the buyers. They may see some different assets in there and say, gosh, they're selling that at a 6.5 cap. I would buy it at a 7 cap. So I'm going to put a bid out there, and then a seller could choose. And if the buyer and seller ultimately choose to act on this order book, then the system automatically makes it. Or you can just go in and say, you know what, 6.5 cap looks like a great class A or class B apartment building there. I've got an extra $5,000. I want to invest in that. Click, and it transacts. And all of a sudden the seller of it has the fiat, the money, and the buyer has the asset themselves. It all happens within a couple of seconds. You don't need to say, you go hire your attorney, I'll hire my attorney. Let's try to come up with this price and drop a legal offer paperwork and we'll review it. That's why this has been an illiquid thing before, is legally you could do it since the Jobs Act and things like that. There hasn't been the technology, that Web3 infrastructure, as well as the transparency that's involved with blockchain, where you get to see every transaction, who owns what type of leverage is actually on it. Does it have insurance claims? Does it burn down before? So it really, I believe, will be a huge fraud reduction mechanism, which I think is great for the industry.
Yeah, I was just thinking the same thing. It makes what is a very inefficient market very transparent and very efficient, and it's only going to get more efficient as we progress, right?
Yeah, exactly. No doubt about it. It will be self-compounding. So as we get more and more assets on chain, more and more investors can invest. As more investors and liquidity is brought to the marketplace, more and more folks want to get on. And like I said, the future is absolutely digital. In fact, the present is absolutely digital, and it's time that real estate takes advantage of the digital era.
Yeah, it's about time. It's interesting. I have a software company that we're in the process of launching, and it's particularly focused on back office and front office for real estate investors. And the ones who get it, right? But the ones who don't I'm talking Aramaic to somebody who speaks English. It's just, but it's nice to see, it's exciting to see technology making this more accessible to more people, which is a great thing. And B, making this far more, like we were saying before, far more efficient than it ever has been. Because that is, I think both those things are only going to bring more people into this market, which is great for property owners, because that is certainly going to create demand that will create additional opportunities for everyone involved.
Yeah. And to your point, give access to those that have never really been able to access these before. So yeah, it's a true win-win. And I think that the listeners should just remember, we went deep just now. We definitely geeked out on some things.
I told you I was going to go a little geeky on you. So
yeah, that's good. I love it. I love it. But the thing to remember is twofold. Number one, at the end of the day, this is still fundamental real estate. You still need a great operator and a great property, and they still need to run that. There's a real world thing going on. So you could take all these digital aspects out of it, the tokenization out of it, everything, and you still have a great fundamental real estate investment operator. That's what you want and need.
This is frosting on a really good cake.
Exactly. And then when you put all those digital components on there, it's just going to enhance that. So now another analogy I give is a cell phone. We could get in and start trying to tell people, and not very successfully, how this works. Like when we get into blockchain and get into all that, it's like shoots the signal to space, and then it hits a satellite and something comes at you. Like it's whoa.
I just want to know if I can call my partner. That's
You
all I
got
got.
to click a couple buttons and you can go face to face with your grandma across the country. And that's how we want to make this use of the platform and the marketplaces as well. If you can do online banking, if you can get on a Coinbase account, if you can get on a Charles Schwab account, then you can get on this and be able to work with it just the same.
Yeah, you don't need a technology background to be able to
Right.
do this. The bottom line from what I'm taking from our conversation, and again, I'm a neophyte, so correct me if I'm wrong, but the bottom line is it is making it so that as a non-accredited person, I can get into deals that I could not get into a year or two ago or several years ago. And also, if I need to get out, it's not the stock exchange, but it's way more liquid than it has been over time. And so it allows flexibility for the general partners as well as any limited partners to be able to get in and out of these what have been traditionally very long-term investments.
Yeah, no, you got it. It's a pathway to potential liquidity that hasn't existed before. And yes, we're still operating under these regulatory pieces like Rule 144 for that non-accredited investor
Yeah, of
could
course.
participate, but it now has a platform and a vehicle with that technology infrastructure that allows it to happen where it hasn't before.
And it protects those people because it forces transparency as well, right?
Forces transparency. And one recommendation I'd make to everybody out there is if you're going to be buying into real estate tokens and digital securities, these digital assets, use a SEC registered platform, use
Yes.
a broker dealer. It's a night and day difference on what the scrutiny that those investments have to go through.
Yep.
And the compliance that those platforms are required to adhere by versus the ones that are unregulated, that are in a frontier where they are maybe be pushing the line of skipping the regulation piece. Their platform's not SEC registered. And so I would just very much caution folks against that, because that get you into choppy waters at a minimum.
Absolutely. Yeah, there's something to be said for having all those letters at the bottom of a piece of paper because they've had to go through extensive scrutiny to be able to do what they're doing and to be able to earn the certifications that they have and the memberships that they have. So it's do your due diligence, I think, is what Tyler's saying. Do your homework. But
That's right.
there are people out there like RE Tokens who can educate you and also bring you along and give you opportunities that, like I was saying earlier, you wouldn't have had access to a decade ago. Right. Cool. All right, let's get into the lightning round. And I've been bending your ear for about 35 minutes now, so we're going a little long, but that's okay. So you okay on time?
Yeah, I'm good.
The first thing I'm always interested in leaders like yourself, you've done very well, right? And so the bills are paid, mortgage is handled, the kids' college is all set, all of that, right? But nevertheless, you get out of bed on Monday morning and you charge in head first into the office to go do what you do. To me, that's purpose, right? So I'm curious about what that drive is, what that purpose is for you. What gets you out of bed on Monday?
Yeah, no, you got it. I've been in investment real estate a long time, and it certainly wasn't broken, so there was nothing to fix there.
Right.
But yeah, what changed for me is twofold. Number one, I learned about and believe very much in the digital economy. That's our future. And also had personal cases to solve where it's okay, I have millions of dollars of equity in my real estate, yet I can't really get to it unless I sell this entire asset or I go to the bank and we're doing a big cash out refi or something like that. And that just seemed wrong. And then the other side of it, just a real quick story. I know lightning round, but I think this builds good context is I got done coaching a soccer game a couple years ago with my daughters. And I had a good friend from high school come up and big hugs. We hadn't seen each other for a while. She says, Tyler, it's been so cool to watch your success in real estate and what you've been doing. And me and my husband, we've been saving up and we would love to invest with you. And we just looked at each other and she said, we don't have enough money, do we? And it was true. I only dealt with accredited investors at that point. The lowest investment minimum I had was 50,000, and I know they didn't qualify for that. And that at the end of the day became my mission. And those two things solve each other, right? Because if she could invest and other people that wanted to could invest, right, that could make my equity that was on paper more liquid. But how do you do that? So I became obsessed with solving this problem, this challenge. And my personal mission has been to help people build wealth through real estate and achieve freedom through cash flow. And to do that, I believe they need access to these investments and they need to learn about what real estate can do for them. And so I think it's just a perfect match.
Excellent. So I'm always interested in, we've all had help along the way, right? It's some generous people who were a few proverbial chapters in the book we're all reading. They were a few chapters ahead of us and they gave us some insights to help us leap forward. And the mentors in your life, I'm curious, what is the best advice you ever got and who gave it to you?
Yeah, you know what? I'm going to take one that is the cumulative of a few pieces of different advice that I've got from several mentors, because I agree with what you're saying. And it's simply, if you want things to be better, you need to be better. And that is a Jim Rohn quote.
Yep.
But that's the message I've received, a pattern format from folks, because so often we're out there running around in the external world trying to find the next best tactic and strategy and all of these things. But the reality of it is your ultimate success is from the inside. It's your mindset, it's your perspective, it's your commitment. And it's what happens is, this quote goes with it, that what pursue can elude you, but what you desire is attracted to you by who you become. So this is a journey about becoming the best version of yourself. And I call it be who you are. And that is going to cause the right things to come into your life versus you exhausting yourself trying to chase them all down.
Said. Said. So I fundamentally believe that we learn, people, human beings, right? In general, professionally, I think we learn way more from our mistakes than we do from our successes, although the successes are fun and the mistakes aren't. But I'm curious about as you look back on all that you've accomplished, what's a decision that you look back and go, man, I would love to have that decision back? And what'd you do about it?
Yeah, there's kind of two ways to look at this, because you just made the point that some of those decisions that you would do differently were completely necessary to build your perspective. So I wouldn't say that I would want it back, but let's talk about that. When I first got into the business in the early 2000s, I just started to get on a roll. Bought my first properties in 2000. And so by 2005, 2006, I was getting really aggressive, but I was still new. And so I was drinking the Kool-Aid that some particular companies or gurus were selling out there. And what that ended up being was massive leverage. It was the type of market where you could buy a property, wait like 60 days, and then go get a HELOC against it, right, and go put that down as another property. And so people were teaching that and we were doing those things. So what that all equaled was over leverage. And what happens with over leverage is when things go the other way, you're in trouble. And that's what happened to me in the great financial crisis. I was doing lease options. So the tenants were paying more than market rent for rent credits, and in the hopes that they would fix it up and do some of those things. And one day, literally, I had 5 houses go vacant in December 2008.
Ouch.
And I learned very much about leverage, and in particular, over leverage, because leverage is a big part of how I've made my wealth. There's no question
Without a doubt
about that. Yeah. But a big difference between leverage and over leverage. And so that played a critical role on how I rebuilt my real estate investment model, how I approached what type of loans I was doing and willing to do. And even in this most recent turmoil that the commercial markets have seen, because I own a lot of real estate today. And what you saw with syndicators is they did these bridge loans, these 3-year loans, these 5-year loans, because commercial real estate, it's not like residential. They're not 30-year loans for the most part. For the most part, when you're dealing with the banks, they're 5-year loans and so forth. But I had done so much, I had suffered so much there that 2 strategies I used that I learned from that major failure, because I ended up short selling a couple properties. I was literally crying in my bedroom, not knowing how to pay my mortgage with brand new twins and a 6-year-old. It was a rough moment. There's no doubt about that. I knew that that mistake was cemented, burned into me, that I would never over leverage ever again.
Right.
And so the way I built my portfolio and dealt with this most recent situation was that I always had either seller finance, some cash, not I normally use leverage, but had no balloons. Or if I was working with the bank, they always offer you the best rate at 5 years. I would pay a little bit more in interest to get a 10-year term on that. And so I never have the pressure doing that. So that mistake changed my investment philosophy. So if you can learn from that, folks, and employ that into your own thoughts when you're considering your investment strategies.
I'll tell you, some of the most successful, trustworthy, responsible operators I know would tell me the exact same story you just said. And one of my mentors, he had lost it. He's absolutely brilliant. He's as honest as the day is long. But if you become over leveraged, there's not a lot you can do about it. And now he's bigger than he ever was. But the idea being that learning those lessons is enormous. Yeah, I've been over leveraged. And one of the ways that I solve that in my own world is, first off, I got rid of those properties as quick as I possibly could. But the other part of it is that we take on with partners, we don't go over 65% loan to value. And I'm like you, I'm more than happy to pay a point or two to buy down to get the 10-year as opposed to the 3 or 5 year that were really easy to get about 5 years ago.
Yeah, exactly.
And so it's a process that you have to go through in order to, either somebody close to you goes through it or you go through it, but it happens. And thank you for your vulnerability and your transparency, because I think a lot of people can learn from that. There was a study from Moody's a couple of years ago, probably January 24, that was basically saying that the 23 or so % of the folks that had bridge debt in multifamily couldn't, when it repriced, they couldn't refi. Quarter of the market, right? It's not a unique problem. It's just part of the process.
And most people ask me, what's the number one risk in real estate? And I always say it's the underlying financing. Because if you are doing short-term financing for long-term deals, you are setting up obstacles in front of you. So do it carefully.
You are on thin ice, and you may not hear it cracking until you're already wet. I'm also curious about how leaders like yourself take in information. The proverbial, what's the book on your nightstand, whether that's electronic, physical. But so I'm curious about how you take in information, and also who you paying attention to these as authors, creators, and whatnot.
Yeah, my entire background is real estate. So the book on my nightstand this moment is The Power of the Subconscious Mind. Dr. Joseph something, I can't remember his exact name, but that's what is on my nightstand right now. But I typically am reading about 3 books at a time, and all I do is consume information. When people ask me how I've gotten to where I've gotten, it's education, whether that's going to events, which I do every single year, or just devouring information. So I'm pretty regimented about this. In my mornings, I have a particular routine, and part of that routine is studying something. Recently, it's been a lot of securities. I've had to go get on my security license and things like that, and studying capital markets and market makers and all that stuff we talked about. But this also has applied to real estate and real estate investment. So I read hard copy books. I watch YouTube videos, and I have an Audible account where I take in audiobook. For example, when I drive, I only allow myself to listen to music on Fridays. Every other day, anytime I'm in the car, it's either an audiobook or a video of a particular area that I'm trying to study, always doing that. My biggest thing, I try to really force out any junk videos because I get caught up in that sometimes as well.
Plenty of animals. That's
So
that's what Saturday's for.
yeah, you're right. So that's why I
Right.
said only on weekends can I indulge in
Right.
some of that. So you got to be regimented, but yeah, hard copy books, YouTube videos and audio books. And it's really every day. I don't think there's a day that goes by that I don't do that. And then getting around the right people at educational events. One thing I would also add that I did in my early days and actually now have done as well is I have thousands of hours with attorneys and CPAs, and you'd be amazed on how many different legal opinions or tax opinions you
Right.
can get on the same exact subject. But it's worth paying that hourly wage, a good one. Like, make sure
Right.
you research and get a recommendation, but it's worth preparing for an hour or two for that meeting and just taking in some of the real world scenarios and some of the questions and sitting with these CPAs and attorneys and getting it firsthand and being able to do all of that. And another way more recently now is AI has become a pretty phenomenal tool. It's not just plug and play. You have to know what you're prompting and know the sources. And I think in the early days, it was a lot more sketchy, but now you can actually, it'll lead you down some pretty good paths, but you need all that context that we described with the audiobooks and the hard copy and the experts before you can actually, I think, be really useful with some of the AI stuff.
Absolutely. Yeah. It's amazing what you can learn from an attorney or an accountant in over a lunch that you're buying, right? And maybe even paying the rate because yes, they see your deals, but they also see dozens and dozens and dozens and maybe hundreds of other deals in the marketplace that you don't have access to unless you were sitting in front of them eating a salad and picking their brain. And to be able to give their professional perspective on things is invaluable and worth your time. And obviously the saw sharpening that you do, that's really interesting that you only allow yourself to listen to music on Fridays. I would love to tell you I'm that disciplined, but I'm not. There's plenty of days where I probably should be listening to the book that I just can't finish. And instead I'm listening to who won the Yankees Red Sox game last night.
Yeah, yeah. One thing I'll add on to the CPA and attorney thing real quick though is don't take what they say as gospel either.
It's an opinion.
Like we said, yeah, there's been so many times that I've been told things and gone back to that CPA or that attorney and they were wrong and they learn from. So be careful about that. Trust your instincts, trust your study. And those meetings are good because
It's information.
it's information. And then you may cause you to do more research and go back to them. Now, guess who's an expert on the subject? You are.
Right on. Yeah. Yeah. Or you go meet with another professional and they're like, who told you that?
Oh yeah, for sure that happens. Yes, exactly.
Right. So what does success mean to you? How do you define it in your life?
Yeah, probably one of the more cliche things is being able to live the life that you want to live. And that what you notice is that's different for everybody, right? I think for me that it's being able to make sure I hit all my kids' sports events, that I can be there as a dad. And I'm not perfect, but I'll try to get above the 80% mark on being
Nice.
able to do that. Yeah, and financial freedom's an unquestionable component to that. Being able to acquire assets that ultimately pay you cash flow is something I believe very much in. How you ultimately get there is up to you. That's what success is to me, is that inner fulfillment, right? It's not necessarily a number at the end of the way. Nobody wants to be the rich guy or gal on the hill with all the cars and toys and nobody to share it with. Because when you build wealth, when you buy lake houses, when you do things, the fulfillment and joy in that is the ability to share it with others and to have the time to do that. In my opinion, is what success is.
Couldn't agree more. All right, my friend. So when not talking about real estate or tokenization, what do you like to do for fun? You mentioned a lake house, so I think that may be part of it, but
Yeah, yeah. got a lake house in North Idaho on Lake Ponderay near Sandpoint. So really enjoy that time. But I'm an outdoors person. So I run Spartan races, which are outdoor obstacle course races. And that has me in the mountains a lot. So I would say that's one of my primary hobbies is doing that. And I've got 4 kids in total, a lot of their sporting events, and being a dad is a big part of it. And I guess more recently, my wife's buying goats and all sorts of animals that are property. I enjoy some of that just being outdoors and the peaceful stuff, but trail running and Spartan racing and stuff is, I think, where I go get into my mental zone that's away from real estate and business and those things.
Yeah. All right. So if people want to learn more about you or get to know you and or obviously RE tokens, what's the best way to do that?
Yeah, I'm on LinkedIn and so is RE Token. So it's just if you search Tyler Vinson, RE Tokens, that will come up, or search RE Tokens for the page. We do a lot of thought leadership and educational information between those 2 channels. People are interested in learning more about real estate tokenization. I highly recommend going to retokens.com. And we have a free download that's a quick start guide to real estate tokenization there. I think people will find that very helpful. Yep. And then we make a lot of great YouTube videos, and that's just at RE Tokens. And so you can really go get a lot of good information about real estate investment and tokenization and these markets that we're talking about. And that will really give you a good look into what the future of investment real estate looks like.
Fantastic. Thank you for that. And we'll put that in the show notes as well, so it's easy to get to you. So Tyler Vinson, thank you so much for joining us today. I appreciate you letting us go a little long, but I'm fascinated by your business, and congratulations on all your success.
Appreciate that. Yeah. Thank you. It's been great talking with you. I'll have to do it again sometime.
Absolutely.
This has been the Real Estate Underground. Don't forget to subscribe. It helps us grow. Until next time, Undergrounders, remember your real estate journey begins with a simple step forward. Now get to it. Bye for now.